The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time. My pleasure to be here at 877-927-6648. And 2 hours have just gone by. Great 2 hours, Steve and Tom. And I come in here, do my best, give a call. I'll be looking at the charts. I'm going to just be discussing all the different chart patterns in a moment. But just the lineup today, of course, after me comes Daryl Martin. Then you got Dave White, you got Ken Shreve, and then back to Tom O'Brien. So a full house on a Wednesday. And Larry Pesavento, if Larry is here, he'll be back for the next hour. I'm not sure. And I will be away tomorrow because I'm doing a Master Trader series live out the office over at Babson Executive Conference Center, and I'm looking forward to that. Busy preparing for quite some time now, doing the final touches. Now, I'm also doing a webinar on the ChapmanWave methodology, and I'll go through some of it as we're looking at charts today. What do you expect? What do you expect to learn how to identify the lowest, most obvious low bar from which to start, a buy signal that should take you to at least a peak A, B, C, and D. When you get to D, that's when there are other patterns that take precedence. Most important out of all of this is that as you are looking at the chart formations, you get to see, just like I'm showing here on Tiger TV, the E-minis. Well, if you look at the E-minis, look at these patterns that just, I guess you have to think of them as human fractals. That is, of course, in mathematical terms, it's probably not a fractal. It's a lot more complex than that. But think of it in terms of there are human. Every morning you have, what do you have for breakfast? Pretty much the same thing, right? Most of us have the same thing. I mean, I've been having the same thing almost all my life. And it's just tea and toast. That's it. So you get into the habit. You wake up at a certain time. You do these things. Those patterns are accentuated. They can become a little bit bigger, a little bit smaller, but basically the core pattern remains. And I think that's what we see in charts. Look at the arch formation here in the 120-minute chart of the E-mini, the S&P E-mini contract. Look at that arch. Well, if I squash this, what do you see? You see that there was an inverted V-shaped formation, which is the same concept as an arch formation. Goes straight up, comes straight down. Remember, I always talk about, unless it's a crash or a huge volume spike on news, most chart patterns just go up, and then they come down in the same time frame. That is, look. The E-mini went in the low of the 2nd of October. It ran all the way from the, from the 1432 area to 1466, a peak F-top. So the most identifiable low bar. And merely what happens, it goes to peak A, B, C, D, E, and then it goes to the 6 highs at peak F. And at 1466 on the 5th of October at 1230, it starts to reverse down. Well, on the way, there were some ugly candles, but basically what happened, the left side to the right side price came down to almost exactly the, around about the 9th of October, 10th of October low, and you can see that there was a price time match to the middle. That's what I call the plumb line. How do you draw the plumb line? Well, that's what I'm going to teach. I'm going to teach you how to identify. Look at the low bar that was made. Also in a left side, right side price time match going to the low of 1416 in the S&P on the 14th of October. And then it runs up to a peak F-top again, another peak F-top at 1458.26, pulls back, and then you get that pattern that I call the rogue wave. Remember I discussed it on Costco and how intraday, we were looking at it. I said, that's a top. It's going to come down, and it plunged to the downside. Makes one final spike. That's where I say it's the Rogue wave and the Chapman wave. It's where the waves are. It's high tide. At 12 o'clock, it's supposed to turn to low tide. No, at least reverse direction to go to low tide. Well, there's one wave that just, or maybe one or two, but there's one particular wave that doesn't see the sign at 12:06. Splash! It gets everybody wet way up above the beach line that was earlier on, that was made earlier on. And then the wave immediately recedes because it doesn't have enough, other than that big splash that it makes. It hasn't got the underneath body. In this case, it didn't. The stochastic and the MACD, which I will teach you about on the 6th and 7th of December, that's Thursday and Friday. Go to the front page of TFN and check it out. I'll teach you how you can look at the internals of the market. And what happens, it comes back in a left side, right side price time match, looks very ugly at one point on October the 19th, but then it has a pretty darn good bounce, and then it comes back, retests, and then yesterday morning, 23rd, it plunges underneath the 16.50 low, and it goes down. So you can see what happens. So those are the things that I look at all the time. Now let's get away from this and let's go through the numbers. The Dow now is up 35 at 13,133. If you're looking at, let me show you the Dow. This is what I show my subscribers every single day. And I give a discussion. Oops, that's not the one. Where did it go? Not that one. Don't lose it. There it is. Nope, there it isn't. Gosh. No, it's not that one. Not that one. I'll find it. It's there. It better be there. There are our daily chart with the ChapmanWave notation. Now, what you'll see is that those cup formations and the ChapmanWave cup and ladle, I teach that pattern, spirals up, and what does it do? It goes to a peak E, it pulls back, runs back up in a cup formation to a peak F at 13,661 on the 5th of October, just a fractional new high above the 13,653 high of the 14th of September, makes another cup formation, and then it fails. It's a pattern that I call the drop bucket formation. I typed it in. I wanted to show subscribers how these techniques work. This, on the right, when it was making that fractional new high, if you look at the daily chart, let's just go, I'll use black and white, it's a little easier to see. No, not black and white, black background. You'll see that when it was making that cup formation at that peak F/B, which became a peak F, look, the MACD was deflecting lower, the fast-moving average, and the stochastic didn't even get above 80%. Good sign to say that it was going to pull back sharply. Now what's happening, we've got 12,904, and above it 12,969, two moving averages of great importance. I will be teaching about those as well. If there is a failure, if the Dow closes underneath the low yesterday was 13,083, if we take out 13,000, it's going to be a very quick drop. And then what you're doing is you're looking at the lows of 12,978 back on the 30th of August. And that's how it works. Where's the resistance line? At the 13,322 level of the 9-period exponential moving average. So far, this bounce is just plain pathetic. That takes me to the weekly chart, and on Friday, I'm pretty sure I'm going to be able to put a down arrow on peak E, and that peak E says stochastic is down at 76% right now, but it's only halfway through the week. We've got to wait until Friday at 4 to see where it closes. But now you can see for the first time that the 9-period exponential moving average in the weekly chart, there's a white line there, is at 13,353. That is becoming a big deal. Why? Because that's the resistance. It was fantastic support before, and now it is resistance. So I love to teach how former support levels can become resistance, how the left side can try to match the right side, how when you're looking at chart patterns, how you can draw one line. How can you take one line and make it so important? Well, look how important this line is. If this line in the weekly chart, there's a very long-term trend line from the 10,404 level back in July of 2011 to the 12,035 low of the week of the 8th of June, is taken out this week or next week, that's going to say, be careful, because there's just There is no evidence that this can be anything but a peak E, and I've gone from a weekly sell signal, which is in right now, to a confirmation of a sell mode if the MACD and the stochastic close much lower. So what does the Dow need to do? The Dow needs to quickly make a powerful move to the upside. It's already had 2 attempts, certainly in the S&P, a little bit in the Dow today, but nothing much of consequence. We need to see 13,350s to 13,390s tackled. That in the Dow is really important. I could relate it to the S&P, SPX.X. So let's go through those numbers again. S&P weekly is the same thing, and I'll talk about the monthly charts. I was going to talk a little bit about politics and all that. You know what? I won't be here tomorrow. It's really important to focus in exactly what's going on. I've spoken about it. Remember, John from Philly called me. I've been talking about this for a while. I've been looking at some stocks that were holding well, that had not bullish signs, but at least counter-trend rallies to the upside potential. More and more and more stocks are giving sell signals to sell modes. In the dailies, dailies have already gone to sell modes. Weeklies are in sell signals. And these were some of the great, absolutely the great NASDAQ stocks of recent times. You know, if I go to, this is not the latest one. This is from, where's my date? The date's been covered up. Look, if you go to, no, let me run the numbers. Dow's up 28 to 13,130. S&P's up 3.35 at 1460. Comp index is down 1.5 at 29.89. That's not good. Gold is up. Oh, gold is down. Minus 350 at 1706. Silver is up 0.007 at 31.80. You know, the more I look at the gold chart and the silver chart, yep, there could be counter-trend rallies. The stochastics down at the lows, etc. But I just do not see at this particular point. Let me just have a look while I'm doing this. May as well. GLD. Yeah, look at that. The GLD's made that a double, this double cup formation in the weekly chart. Second peak D at 174.07. And now it's trading 165.28 below the 9-period exponential moving average. MACD's turning down. On balance is turning down. Relative strength is weakened. It was very strong, and now it's weak. And you've got the stochastic at 80.74. This is a very critical period for the GLD. This is the Spider Gold Trust, and I've got a peak F top in the daily chart of 174.07. Most importantly, the 9-period exponential moving average, and this is another thing that I teach. I love showing you all these different indicators that you can use, is saying be careful, because 167.70 is the strong resistance, and so far it hasn't shown any sign in the technicals that it has anything but a kind of a bounce, and even the 120-minute chart has gone below the 200-period exponential moving average. So let's finish up as we go to a break. High-grade copper is now 356.55. I'm very concerned. It starts to break under 340 or 3.3. Hey, it's going down below 3. And crude oil is at 85.84. We've been talking about it for a while. It's making the arch formation down. And bonds are down 13.30 seconds at 147 and 11.30 seconds. There's a bunch to talk about, but I'll take your calls. Mike and Ken are online. I'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. We've got a couple of people online. We've got Mike in New York. Hi, Mike. How are you doing?
Good, Basil. Short O'Reilly. They report earnings after the close today. I'm considering adding to the short position. What do you think?
Well, everything I'm looking at says to me that if all he was to bounce, the best that I could see is a bounce to 85.42. I'm not sure that it could get there, but there's a pattern that I look at in the monthly chart, and that says that the tide has turned, and that there's a really good chance that it could continue down. But there's one candle that is really important in my work, and that creates a rectangle. And that rectangle says that until there is a decisive break of, so let me just say, first of all, just right off the bat, the reason why I'm going to take a little time here is I absolutely agree with you. The way other auto parts companies are acting, and one in particular, you can never be 100% sure, but I'm pretty sure that the upside for Orly, that is O'Reilly Automotive, O-R-L-Y, trading at 81.75, down 89 cents. The path, as David White would say, the path of least resistance. To my eye, the path of least resistance, because the MACD is negative and the stochastic's negative, and it is... Any way I count it, I'm pretty sure that I can feel comfortable in saying that the 107.13 high of May of 2012, this year, was the peak F top in the ChapmanWave, And now it's been trading, well, 1, 2, 3, 4. This will be the 5th month that it's trading underneath the 9-period exponential moving average. Not by much, but enough. Now, let me show you exactly what I'm talking about. The wick of the candle of June that says it, let's see, so it closed at 83.77. It's trading right now at 81.64. The low was 75.61, so that's quite a way down. That's 6 points down. But I have said to you that there's a possibility of a bounce to the upside, which is 4 points. So yeah, this is the way I would do it. I see upside is very limited. I know that you are prepared to hold your positions a little longer than many people, because if you feel very convinced that you've done your fundamental homework, especially if you're putting it together with a technical aspect, my thinking here is that if you were to add this afternoon, you might want to add either in 2 positions, which one would be you could add now at 81.64, and if it rallies, I would love to see it rally sharply into the close. It doesn't have to take out yesterday's high of 83.51. I love to see it get back somewhere above the close of yesterday, 83.31. Oh, I'd love to see it get to 83.40. Why? Because if it rallies into the close and then it spikes up, the distance to the 200-period exponential moving average resistance at 84.42 is much, much less. That's number one. Number two is, if you are right, it means that you've got your positions and you've got a number of positions to start exiting at certain points. And the points that I would refer to you would be the low of yesterday, 79.24. The moment it goes underneath that, one of your positions can have a much tighter stop. If it takes out the low of 78.70, that stop will probably still be, buy stop will still be holding, because it'll do that in a move that starts tomorrow morning. And if it takes out the low of 78.58 of the 18th, just 4 days ago, not only does the weekly say, oh, there's no question now that the low of 75.61 is a target, but it also says, I know this sounds a little weird, but the 63.32 level over the coming, not weeks, but months, would then become a target. And that would correspond to the pattern that I call the Eiffel Tower, straight up, straight down. It looks exactly, I'm going to type it in for those of you in the den. This is the monthly chart. This is what it looks like. It looks like a capital A. I call it the Eiffel Tower. And what happens in a pattern like this is that the price doesn't have more than momentary bounces, but it's sliding down like a slalom in skiing. It's sliding down the right side of the mountain, and eventually what happens, especially if it takes out 75.61, it'll go to a point of great importance. I don't really see one now other than the 200-period moving average in the weekly. This can have quite a deep slide. Now, my biggest concern is that if this is happening into the auto and truck area, and if it's happening into the retail section, the RTH, actually, I'd like to talk a little bit about this. If Ken from Madison doesn't mind holding on, just tell my engineer if you need to go straight away, I'll take you. But I just want to briefly talk about this when we get back. So we're on with Mike in New York. We're looking at Orly, which is auto and truck parts, and I'll look at the RTH.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, and I was in the middle of discussing with Mike from New York the what I call key sectors, at least in my analysis of the market. And my guess is I'm looking at a tired consumer. The consumers become tired. There are some consumers now who are not doing the small stuff. Now they're going for the big stuff, housing. I've got my own opinions about housing, and I'll talk about it next week. But in the meantime, back at the ranch, the RTH, the iShares, it's the Market Vectors Retail ETF. Remember what I typed in here, what recession all the way up. Now it's leg D in the monthly, so the technicals there are still good. But the weekly chart is testing the up channel inside track support level after a peak F, and everything about the technicals say this is the action of a peak F. Believe me, if the RTH at any point in the next 2 weeks breaks under 43, it's at 44.36. That's just going to be negative action. If it bounces and is able to take out the high of last week, 45.92, I'll be very impressed. I might have to even change my notation to possible leg C if it breaks above 46.38. But those are lots of ifs. And I'm looking at stocks like an Orly that say, hey, if everything's going so great, why have you been pulling back? Because the orders Ford and GM are acting lousy. So I think you're correct. I think you're in the right move. I think if you nibbled on a little bit more right now, yeah, it's a big deal because it could pop 3 to 4 points. What are they going to say after all the declines of the last 5, 6, 7 months? since April. What can they say to be so impressive? I think you are correct, but I would still handle the trade. I probably would say to you, just my own way of looking at it, because I would hate to think that on an earnings report in seconds, you're giving yourself the risk. Too much risk. A little risk. Hey, that's what you do. You know what I'm saying?
What do you have on the 120-minute chart on oil?
And my 120-minute chart says, yeah, it's popping up. It's in A, it's in B, it's in C. But you know what? It's making peak C right now. 83.71 is the resistance. But this says it can rally, and the rally that would go to 84.97, to 84.97 to 85.37, that's a lot of points, 5%. I'm just saying that I know hope is not the word that you want to use. I would prefer that you added, now it's fine, but adding that extra little bit, I would prefer to see a rally into the close. I think that would be the clincher, because then you've made your risk 2 to 3%, and that's a smaller position that you can really wiggle, and you can do a lot of things with over the coming days to get out of it. But it's just the risk. That's all I'm looking at. As far as looking at the tide is going down. That's the way I'm looking at it. I think you're absolutely correct. You could even say, you know what, I'll give up some points on the downside. If I get confirmation that it's weak, I can add to it for the next weeks and weeks. I can add to it as it goes lower. Yep. Hope that helps you.
Yeah, very much. Thank you. Again.
Thank you for calling. That's Mike in New York. Let's go to Ken in Fort Madison. Hi, Ken. How are you?
Good morning. I'm very good, Basil.
Sorry to keep you waiting.
Thanks for taking my call.
My pleasure.
I'd like to have you look at DuPont. I know you watch it, and
I do.
Looks like a good buying point right here.
Okay, now, I look at it a little differently to you, because the buying point would say the tide has changed if it was a buying point for an intermediate term 4 to 8 weeks. I don't see that. The way I'm looking at DuPont, and this is another big, my Dow quartet, DuPont and Caterpillar are often the guest artists, but I've been for a while now just sticking with the 4, GE, IBM, Triple M, and UTX, and believe me, they are not looking great at all. DuPont fits in that category because the monthly says it's arching over. It's a good chance at 44.90. DD is the symbol, down 35 cents right now. It could quite easily, if it takes out... no, it's already done that. The weekly is taking out the 45.69 level. I would actually tell you this, that if DuPont has a really good rally to start to partially fill the gap and goes from the 44.90 area or somewhere in the 44s up to 48 over the next 3 to 5 trading sessions, I would have to say it's on my list to possibly short. I had, in fact, had it on the list as a potential short. I even had the peak D in the 120-minute chart. I was just busy focused somewhere else, and I missed it. I'm very upset because everything about the weekly chart and the monthly said that the technicals are failing. So this is a serious thing. If DuPont is giving me signals that it's good, this is DuPont, DuPont, the Nemos, chemical, plastics, rubber. I mean, they're in everything. I'm a little concerned. So I'm not going to say to you at all that I'd be a buyer. If you're looking for a quick bounce, the quick bounce would come anywhere between right now and I'd say probably looking at the left side. No, it's already under it. Oh, I have to tell you, it would just be a real quick bounce, and I would just nibble on it for a quick bounce from the 40, must hold 44.20. If it goes under 44, I wouldn't even want to touch it. But if it holds here and the general market over the next 2 days has a rally, then you'll get yourself a bounce, and that bounce could take it to 45.90 to just over the gap gap high of yesterday, 46.62. Here's another thing about gaps. This is what I love to teach in my Master Trader series. How gaps work. A gap either gets filled the very next session, either up or down, or if that gap, if it's a gap up, if the gap low, if the price remains for the next 3 to 4 120-minute charts, bars, way above the gap low, that says there's a good chance that it's going to make an A to B to C to D up move within the flag pattern that's formed. Therefore, in this particular instance, if there's a break, it's not even close, a break above the 46 62. When it starts to come back down, it's going to do a little 120-minute trough A, trough B, trough C, trough D, and retest the lows. At this particular point, it's gone lower than the gap down of yesterday. The third day is the most important. My rule of thumb is when it does that, it's the third day. That's the candle you've got to watch. If you want a quick bounce, watch tomorrow. And if tomorrow it goes to, I don't care where it closes today, but if tomorrow it goes to plus 15 to plus 22 and the general market is rallying, you've got yourself a real quick small position trade, maybe 1.5%, 3.5% if you're lucky. But that's all I would see. I would be very nervous about DuPont at this point, other than a counter trend bounce. So I hope that helps you.
Thank you very much. You have time to look at KCAP?
Let me put it down. If I have time, I'm going to write it down here, KCAP. I don't think I've ever done a notation on that. I'll try to look at it. We've got callers waiting, so let's see what happens towards the end. Thank you, Ken. Thanks for calling. Jason in Spokane, Washington. Hi, Jason. How are you?
Perfect. And yourself?
Very good. Thank you.
So I've never traded VIIX before, but I'm curious about it.
Okay. Now, there are a couple of things that go on. When you get a really sharp move a sharp move down in the stock market, that's the Dow, the S&P, and the NASDAQ go down together, like we've seen the last 2 days.
Yes.
That's when the volatility index actually increases very quickly. In between, when it comes down and the VIX itself is trading, nowadays it's trading between 1650 maybe to 1480. When it does that, it's just a terrible trade because you're really not going to get very much unless you intraday trading. I don't think that's what you were referring to.
No,
now, right. So now let me tell you what I'm looking at. On my 120-minute chart, in my overview market today section of my very comprehensive daily report, and I really put hours of work into a one-day report. I do it. I love doing that. It made a peak D high of 19.65 intraday yesterday, and then closed at about 18.65, but 18.83. Now it's gone down to, it's filled the gap and it's gone down to 1793, trading right now at 18.42. The volatility index, now I'm going to go to the volatility index, the VIX index, because everything goes off the volatility index, as you know. So the volatility index I have now in, let's see, I'm going to be very strict, A, B. I'm going to call this C. I want to be as conservative as possible. The volatility index has gone, it's at right now on the 200-period exponential moving average, which has been a tremendous barrier. It's been building towards it ever since it made a low recently of 13.51. And that says to me that in this particular instance, the volatility index, now that could be a D, it could be a C, I'm calling it a C for now, has, if it remains above 18 for the next day or two, it's building a base that says, hey, I want to finally go into the 20s. If it goes in the 20s, your so it's VIXX. I don't think I've actually notated. No. Isn't that VXX the symbol?
VIIX.
Yeah. Oh, VIIX. All right, VIIX. I've never actually looked at this one. The velocity shares VIX short term. Okay. So on that basis, the low of 17.56, 17, there's a lot of evidence right now that says that this particular stock, this particular index wants to go higher. Okay. So you've never traded it. Now, I've only done that once or twice, and not for quite a while. And so I'm kind of a little out of touch with it, but I do know that I follow the VIX very closely, and I know that people talk about the V. I think it's the VXX. I don't know the VIIX that well. So I'm going to suggest to you that if the VIIX goes above 21.15, it's at 20.13. That was the last high back on the 26th of September. That's going to suggest to me that a cup formation is building, and that the stochastic, which is 63 and rising, is probably going to get to 80%. Now, how do you trade it? Can I make a suggestion? In your portfolio, let's call it a portfolio, whatever you have as a portfolio, and I include whether you have a house or rent it, whatever it is in your portfolio, if the VIIX is just a very small portion of a position that you put on, I'd be comfortable in saying to you that you could nibble on it right here at 20.13. Would I put a stop in? The stop, I would probably say to you, would be a pullback to about 18.70. So a percentage basis, it's getting there. It's about 8%, maybe 9%. But it's really, I'm talking about it not just as an insurance factor. I'm talking about it as possibly building a base for a move up to the previous high, which was 21.15. But it looks to me like if it really garners strength in the next 3 to 5 days, this thing could go very quickly to the 21.70, 22.30 area. So you've got yourself possible 8 to 10% on the upside if everything works out, and then you can just adjust your stop, or you've got yourself an 8% risk. Now, I don't want to give you, I don't know how it would fit into any portfolio. I don't know whether this would be protection for your long, maybe you have mutual funds, whatever it is. If it's not that, if it's just a pure play, then I would say to you, start a tiny position here. If it takes out 20.38, you can add another small position, and you can make a stop on one of your positions somewhere around 19.16. That's the way I would trade it. So far, the action today in the market is very poor after a 500-point or 500-point decline straight down. This is shocking action. So I think you're on the right side. Market's looking very weak, and you know exactly where your stop is. I still, because you've never traded it before, keep it kind of small. Don't get carried away. But that's the position that I would start. Now, I haven't said that very often. I remember saying it once before when we were coming down. I think it was April. So I had a caller. But mostly you want a really powerful move to the downside. Even though we've had one, you want another one coming up pretty soon. Even if there's a bounce of 70 to 90 points in the Dow, 9 points in the S&P, I think you're still in the right position. Hope that helps you.
Yes, very much so. Thank you.
Thank you very much for calling. I appreciate it. Jason in Spokane. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, how are you doing today, sir?
I'm doing fine. How are you?
Very good. Hey, Basil, I'm trying to get into two stocks here. I was looking at stocks that I heavily shorted and have been down for a while, and I came up with Travel Zoo, TZOO, and Skul, SKUL. Which one do you prepare here for a bounce, just for a bounce?
Wow, Skull Candy. I've only heard of that. I've never even seen the chart. Skull Candy is the one for a bounce. Why? Because your stop, look, the last low, SKUL, trading at 12.05, up 9 cents today. Monthly chart is just horrible. And you know that, right?
Yes.
Excuse me.
Looking for a bounce.
The weekly chart is making the M pattern as an H that fails. Actually, it's the third time. It just keeps going up and then down. The question is this the time that it's going to have a nice move as it has previously? Let me go to the white charts. I want to show callers exactly what we're looking at here and what I would do for a base. I think you've got at least one very good pick. Let's see if you've got two picks here. I don't actually like TZOO, but I'll have a look at it during the break. We'll be back, folks. Okay. Basil Chapman, Tiger Technicians Hour. Dow is only up 9. S&P's down to 1.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're on with Freeman in Dallas. We're looking at Tizu and Skull. Skull being Skull Candy Inc. Nothing sweet about this chart, I can tell you that. But, you know, the big... If you look at every other takeoff point, and you have to look at character of stock, you have to look at the stock because it tells you what its own character is. There's some stocks that always just explode out the box. There are other stocks that years ago, Sears and Roebuck used to take its time and then build tremendous energy upside. And I noticed that because the on-balance volume had to catch up to the price always. Some stocks build and build and build, and then they just explode. Now, this one explodes out of the box like it did at 11.92 on the 21st of May. That's SKUL, trading at 12.06, up 10 cents. And it did that by going immediately with a beautiful candle the next day. When it came to the low of the 18th of June, let's say at 12:30, it did exactly the same thing. And even when it came to the trough that started the new leg buy signal at 13:51, the 12th of July, it messed around for 2 sessions. But then there was an explosive up move. Even though it closed at the low, it was still a very strong candle. This thing's showing nothing. Even the low that was made at 11.84 on the 13th of September had some really good action. Wide price range, that's really what I mean. Here I'm seeing the tiniest little thing. So if you're going to start a position on SKUL, absolutely 1188 to 1184 is going to be the critical support. I don't have to tell you. You know that, because if it goes below that, that's fresh territory on the downside, right? So,
yes.
And Ramfrey says in the den, develops and distributes headphones. Oh, of course, Skull Candy. It's not candy. It's even there they misrepresented by their name, Skull Candy. It's headphones. I remember that, and other audio accessories. Well, other technical. I'm concerned here. So if you're thinking you've got yourself a trade, it only needs to go to 1245, the 9-period exponential moving average, to show that it's got some upside energy. I would probably wait for it to actually move. It's up 10 cents today. Hey, that's good, but it's nothing compared to what it's supposed to do. I would probably say to you, hey, wait until it holds above 1226, the high of yesterday, for about 2.5 hours. If it's holding for that period, I'd start a little bit, and if it actually goes above 1245, I'd increase that, and then I would have put a fairly tight stop on part of my position. That's the only way I would trade it, and let it tell you whether it has, this time it has the strength to move higher, because this is a successful, so far, dreaded H pattern. The H has not broken the 1184 low bar. That is a positive for the 120-minute chart. This 120-minute chart looks like a monthly chart. I've never seen such an active, well, I have, but not very often, 120-minute chart such as this, and it's saying, all I can do is have feeble rallies. I can barely close above the 9-period exponential moving average. In the past entire month of October, I've only closed above the 9 EMA maybe 2 or 3 times. Every other time I've failed. So this is the moment that it better work to add huge volume to the downside. But if it's able to do what I just discussed, then it's got a little bit of an upside. 1216 goes to 1217, start a position, a little bit of position. If it goes to 1226, you can add to that position, and 1217 to 1215 should be your stop. That's the way, and I wouldn't be touching Tizu at this particular point. Hope that helps you.
It does, Basil. Thank you very much.
Thank you very much. And I wish you luck on this one, because it's going to need a lot of firing power to get to the upside. Okay, folks, let's go to this. The 3 bears. Short float is 64.22%. 64% short float, Freeman. Thank you, Rom. Wow. Okay. Hey, I'm going to be here tomorrow. This is what you're going to look at. If the volatility index, let me do this real quickly. If the volatility index, I'm running out of time, VX.X, if the volatility index holds above 18.40, be careful, because if it goes into the 19s again, this market's going even lower in this move. It's not even going to wait. If the Dow is able to spike to 13,290s, that's good.